So I don't think either of these guys need an introduction, but I'll do it anyways. To my far left is Greg Smith from Equinox, an emerging intermediate gold producer. And then we got Ewan Downie with Premier, who also needs no introduction, who's had multiple successes in the market. We'll touch into that. So Ewan, what's the first take you would say from, when you had your discovery, and I teased that you're part of the Thunderbird Mafia, the Thunder Bay Mafia, and with Wolfden, the successes there, and how has the market changed in the last 15 years, in your opinion?
I think we've seen a lot better markets than we're seeing today.
But from an investor standpoint?
I think one of the biggest differences we're seeing is in the fund flow. When you try to grow a larger company, it's obviously important to have institutional investors in your stock, and seeing so many of those institutional funds going passive rather than having active management makes it a little more different. They're really trying to word press releases certain ways so that trading machines trade your stock more than people sometimes. That's a big difference in the investor flow.
Isn't it an incredible value investor standpoint where you can buy these assets so much cheaper and they're so much more advanced than just a few years ago, but yet no one's doing it? So what changes?
We don't really think assets are cheap yet. They're good assets are still trading at pretty high multiples to what we think they should. So we've been actively looking at additional acquisitions, but it's hard to find really good value, to tell you the truth.
So Premier produces how many ounces of gold right now? Net.
Last year we did 140. This year we'll do just short of 100 as South Arturo's transitioning to underground. Next year we'll start ramping up, and a couple of years from now we should be doing over 200. So the market, the big money, still sees that as a junior gold producer. They kind of all the bankers got together and said 300, 350 is kind of the intermediate cutoff. So a lot of these funds won't buy it, which normally they would have. Like the GDXJ now is looking as B2 as a junior, So does that need to change to get action in the stock price? Yeah, I think it would help for sure. Size right now, you often see the market change what it wants to see. As this panel is profitable gold producers, we're more focused on delivering on assets that will make a profit and make the company money, rather than just necessarily we have to be this big to attract an investor.
So Greg, you have the environmentalist mafia on your side. You got a guy named Ross Beatty, who's a billionaire and an environmentalist, as the largest shareholder, and he's put up over $100 million into the deal, and he's publicly stated that he'll invest $500 million of his own money to expand the assets. By January 1st, 2019, what does Equinox expect to be full year production guidance?
Well, today we're producing 0. And as of next week, when we close the acquisition of Mesquite, that'll put us on a run rate of about 140,000 ounces a year. By the end of the first quarter, I'm going to go 3 months beyond January 1st, but by the end of the first quarter of 2019, we'll have our Aurizona project up and running, commercially producing. And between the two of those assets, we'd be at 280,000 ounces a year run rate.
So 280,000. So you're at the cusp of becoming a mid-tier.
We are at the cusp, yes.
And then what brings you into a solid mid-tier? Do you go buy something else, or?
Well, we've got the Castle Mountain project as well, right? And so next year our intention is to develop phase 1 of that project. That would bring another 45,000 ounces in.
So now you're over 320.
So now you're at 325 in 2020.
In 2020. So, even what has to happen here? More consolidation?
Sure, there's opportunities to consolidate. We're starting to see some companies merge. We're actually seeing Barrick and Randgold merge.
But was it surprising to see that at no premium?
Not really. I think it was a well-received merger. Barrick stock price.
The premium came after.
Yeah, it came after. Often when companies pay a premium, you lose the premium on the company buying because the stock price gets hit. So if we were looking to grow through acquisition, probably prefer in that market merger type scenario, because then typically you see a lift on it because somebody's not maybe overpaying for an asset. However, with our current portfolio of assets, we have 2 projects that we're permitting right now, and assuming we build Hard Rock and Cove, we expect to be producing over 400,000 ounces a year, organically growing.
By what year do you see that full run rate?
22. 23.
So 2.5, 3 years,
Yeah.
you start that. So I think this is the only retail show in the world where you can have a billionaire talking in one workshop who is the founder of Gold Corp, and he's doing it again with McEwen Mining. And he's got, not only the best hair in the business, he's got the best business card in the business. Rather than chairman or CEO or president, he's got just title CO. And talking to him, I go, what the hell's a CO? He goes, I'm the chief owner. He's the chief owner, and he's about making this his next $1 billion score. And it tells me something from a market standpoint where this is interesting. In the bull market, you don't normally see that. You see the moose pasture, the early stage stuff on stage, and people excited about it. No one has any time for that, and barely any time for these emerging growths. So, Greg, in the last year, can you explain the growth of gold per share on permitted and reserves and measured and indicated to a shareholder in a company? If you're a shareholder of Equinox, how much have you diluted me in the last year? Because that's what everyone's used to in mining.
And I would argue we haven't diluted you at all.
Exactly. So make that argument.
Yeah, we've issued equity in the context of M&A to grow our company, but we've done it in a way that we feel is responsible to our shareholders, and I'm a shareholder, so it's important to me too. And we've done it where it's accretive on a per share basis, and that's critical, right? So if you looked at our company 2 years ago, we had no reserve ounces, and we had, I think, 2 or 3 resource ounces per 1,000 shares of the company. And today we have over 5 times as many resource ounces per share, and we've got now 10 reserve ounces per 1,000 shares of the company from 0 2 years ago. And that's on a per share basis. And that will translate also into cash flow per share, production per share, NAV per share as we bring these mines into production. So you can call it dilution, I call it accretion.
Yeah, and that's what I'm trying to argue is the GPS, this indicator that's on my website, gold per share. As a shareholder of the company, I care about what my share, what my right of this company, is it growing or is it worth less? And with Equinox, it's growth. So Ewan, tell me about what's going to happen as a shareholder of Premier moving forward, or over the last year.
Well, over the past few years, we've grown from having nearly 0 reserves to 3 million ounces of reserves, and more than 7 million ounces in resources in other categories. So we've steadily, through the drill bit, been growing our resource ounces. And Premier hasn't issued equity other than to just Orion as part of our financing to buy the Mercedes mine in 4 years. We're currently building 2 operations in the Carlin Trend with Barrick, an open pit and an underground mine. And we're doing that with our current cash balance. So we're not, we've got a very strong balance sheet, and we're able to grow our assets organically. So Premier's been fortunate that we haven't had to issue equity to keep our business growing in about 4 years' time.
And that's why you're on stage. You've done actually a disciplined approach to the mining business.
I'm a pretty large shareholder of the company. I've increased my position this year by more than 250,000 shares. So I do.
So what percentage of your net worth is in?
Probably 70%.
70?
Yes.
Greg, what percentage of your net worth is in the company?
Well, if you exclude my house, I would say close.
Well, the wife, your house is your wife's, not yours.
Well, that's exactly. At least 70, probably 80.
Excellent. Okay, what jurisdictions will you not be going to, Ewan?
I'd say for Premier, we'd probably avoid Africa as a place to be. Not saying that we don't think it's safe. We
don't have an advantage there.
You don't have an advantage there. So we tend to be, we market ourselves as being entirely North American focused, and our plan would be to, if we were to grow, to look primarily to the Americas. But always, one thing we say at Premier is never say never. If the right asset is to be found and you think it's in a right jurisdiction.
But let me just throw some rapid fire because I'm going to have fun with this. There's certain areas in Canada that people tell me are worse than Africa, according to Rick Rule. British Columbia.
I don't think British Columbia is that bad. There's a lot of mining in
Either
BC.
do I.
So I wouldn't shy away from British Columbia, but I, like Rick, do think Canada is a challenging place to build mines today.
California.
I'd go to California, sure.
For vacation or for mining?
Both.
Greg, where will Equinox not go?
Most of our trade is on New York.
I mean, there's the obvious places we won't go that no one will go, and let's just say Venezuela and
Russia.
the DRC maybe for us. Whenever someone asks me that question, I say God made gold and the devil spread it around, and so you have to go where the gold is, and it all depends on the opportunity. And if there was an opportunity that was so compelling, it would be irresponsible to our shareholders for us to ignore it. I think we would look hard, and that includes Africa, absolutely.
So for the next phase, Ewan, for Premier as a shareholder, is it more about organic growth? Or are you kind of signaling to the crowd, look, if I can get a good deal, I'll do it, obviously. But if you do that, what's the criteria? It has to be producing, or it has to be permitted and in the development phase. If you're to take something over, what is the criteria?
I think we look at assets, we've constantly looked at assets at all phases of development. Currently, if we were looking to grow through acquisition, not saying that we are, we would probably look more towards something that is permitted to be built or built. Would be preferred to sort of bridge a bit of a gap we have in our production as South Arturo ramps up. But South Arturo last year, the phase two open pit that we just finished mining, our costs per ounce were $3.51 an ounce, all in sustaining. Mining.com just rated as the lowest cost producing mine in the world. We're building 2 mines there right now. So we're pretty excited about those coming online for our future, rather than necessarily saying, hey, we have to find something.
Yep. So Greg, what about from an Equinox standpoint, organic growth is, you have it laid out. You got, over 400,000 ounces laid out internally within 3 projects that are permitted. But what criteria would a project have to get Ross Beatty and Equinox excited?
Well, I would say, just based on our current strategy, which is to grow profitable production, and Ross has been very transparent about this. He wants to build Pan American Silver in gold, and that means multiple assets producing in multiple jurisdictions. So we're still looking for things that I think either are doing or could do 100,000 ounces a year. Things that I agree with you, and if it's got a permit or it's on a solid path to development, that's going to be more interesting to us right now than grassroots. But as we've built our portfolio to the point it is now, as you mentioned, we can be a little more flexible in looking at different stages of the development timeline. So,
Ewan, let's stress test the gold market and pretend we have a horrible gold market. At what price per ounce of gold can Premier still create a positive cash flow?
Well, today, our costs at Mercedes this year have been high owing to a lot of the new development we're putting in, but we're quite confident that fourth quarter and going into next year that it'll produce at about 800 to 850 an ounce.
So let's say all in
sustaining.
But I don't even like all in sustaining costs. Let's go all in shareholder cost.
All in with capital and
everything.
Overhead,
OpEx, everything.
Probably Mercedes would be up in the 1,000 ounce.
So $1,000 you stop investing into development.
Yeah. Whereas South Arturo would probably be closer to 600. So very, very high margin.
So all in, you're probably about 850?
Yeah.
Okay. Greg, at what price is Equinox viable? Like, we've bad gold price.
Yeah. I mean, we've got some debt, so I'm going to table principal repayments for a second. We've worked pretty hard to keep our G&A very low, and certainly on a production basis, I think it's going to be one of the lowest. We're very comfortable at $1,000 in terms of maintaining our cash flow and profitability at that level. And if stress tested down to that, I mean, it's the one thing we can't control is the price, so what we try to control is our costs as much as we can.
So you can't get it down a little bit as a huge shareholder of Equinox?
Well, hey, I mean, listen, our all-in sustaining, which I know you don't like, so call it between 750 and at our two at Arizona and Castle Mountain. It's a little higher at Mesquite. Our G&A is going to be, call it 40 maybe, and then you've got some interest. But other than that, we're comfortable at less than $1,000.
I care about all-in shareholder cost. Okay, now I'm going to ask you guys a 180 question. You're not allowed to pick your own company, and you're not allowed to pick the company beside you. If you're a subscriber or you're advising Marin, what would be the one stock as a peer comparable would you buy, Ewan?
As a peer comparable?
Correct. Like it's got to be a junior, sub 300,000 ounce gold producer, or a developer. Doesn't have to be producing. You're a junior.
It's Africa where I said I wouldn't go, but I actually like what Rox Gold's doing. Good grade,
Low cost.
solid operation.
Greg? The name was Rox, R-O-X Gold.
That is a challenging question for me, actually, because I'm not looking to buy any of them right now. I'm more interested in some other companies, but if I looked at
not as Equinox buying it, you as a shareholder.
No, as a shareholder, yeah. I know. And so this might be a bit contrarian, but I really like the people involved, and I think that that they're going through a tough time, but they're going to come through it, and I think they've got a decent portfolio of assets. So I would have to say Alio at an $80 million valuation, Canadian.
Really, even though they're so high cost producer?
Well, it depends what you believe, where you believe the gold price is going, Marin. And at 80 million Canadian, I think with two operating mines and a development asset.
I know Greg's a good guy, but that's $1,600 cost.
You've got Greg in there, you've got George Brack, you've got Mark Backus, you've got great people involved with that company.
That's a very contrarian. That's a call on gold because if the price goes up, they will go up phenomenal because of the margin factor and leverage. Interesting. Okay, last 2 minutes, I want to take questions from the crowd. You got two guys that are building real gold producing companies. This is very rare in the sector, guys. Remember, 1 in 3,000 ever becomes a mine. And these guys are doing multiple mines. Any questions? Yes, sir.
How does the results of the Brazilian election yesterday impact your Brazilian operations, do you think?
So it's probably not going to have a significant impact on our Brazilian operations, but as a broad comment, the winner last night was Bolsonaro. He is pro-development. He's pro or deregulation, lower taxes, pro-mining guy, and sometimes the headlines around him are kind of dramatic, and so you have to kind of cut through that noise. But for us, his philosophy, I guess, around development in Brazil and regulation in Brazil is positive for us in the country.
Next question. Wow, no questions. You guys are being let off pretty easy. Yes, sir.
What do you guys feel about the streamers?
Okay, so
Opinions about royalty streamers.
the producer never likes a streamer, but let's hear it.
In terms of having a stream on your mine, or what do you think of this companies who own the streams?
As a business model, and how it helps miners like you, or how it maybe cannibalizes.
Well, I think it does take away from cash flow. We have a silver stream on our Mercedes mine as part of the acquisition. That's how we funded to limit dilution. Silver makes about 5% of the revenue, so we weren't putting a cap on our main part of our revenue driver. But given the markets the way they've been the last few years, there's not a huge equity market out there if you need to raise money. So these streamers and private equity funds, I think, are pretty important for driving the industry today. Without those, we wouldn't see the growth we're seeing, because there's just not the access to capital that there was 5 years ago for companies who want to grow an asset through, we're going to issue shares. So we see a lot of hung deals with not enough buyers lately, which 5-10 years ago would have sold out, and they were 4 times oversubscribed.
It essentially comes down to cost of capital. The royalty companies and streaming companies in the last 3-4 years have traded at 50 to 100% premium to their net asset value, whereas the producers and developers are trading at a 50, 60, 70% discount to the NAV. So that arbitrage opportunity is what the streamers and royalties took advantage of.
I know the streamers promote that they don't have the operating risk, but they do, because everybody who pays them a stream is a risk, so of that mine operating. So I don't subscribe to it being a totally de-risked business as they promote.
Ewan, what booth number do you have?
Second last row. I don't know what the booth number.
Well, he's going to be at his booth, so you want to pick his brain. Greg, what booth number you at?
We're at 202, second row from the back.
So these
Same
are guys doing the real deal. That's why they're up here talking to me. Thanks a lot, guys, for doing this.
Thank you
Marin.
very much.